It may be the new year, but Alistair Darling's resolutions will have a distinctly old year feel. Top of the list? To force banks to lend after new housing data has today revealed the depressing truth that all his efforts so far have failed to kickstart the mortgage market. With limited fresh lending, the housing market is cracking under the pressure. According to the Halifax, house prices dropped 2.2% in December and fell by just over 16% for the whole of 2008. That's the biggest annual drop since records began in 1983 and compares to a drop of 13% during the entire house price crash of the early 1990s.
What we will probably see is falling house prices throughout most of 2009, and even on an optimistic scenario, if prices then begin to level out, I think we've got several years of stagnation to follow.
And new figures for mortgage approvals suggest the impact of the credit crunch is set to creep well into the new year. In July 2007, 113,000 mortgages were approved to buy houses. That was down to 75,000 in December of that year. The latest figures show just 27,000 mortgages approved, the lowest number on record. The Bank of England survey revealed that the reduction in mortgage approvals and new business loans at the end of last year was greater than it had expected. Loans will also be harder to come by in the next 3 months, it said, intensifying the economic squeeze. Nationwide, Britain's biggest building society added to the gloom, saying it will not pass on any further interest rate cuts to customers with tracker mortgages that follow Bank of England rates.
The Treasury has said it's closely monitoring the commitments made by the banks and will continue to take whatever action is necessary to ensure the availability of lending. Increasingly, though, that action looks like it's going to have to be more government intervention, with fresh funds being made available and additional guarantees for business and mortgage lending. But critics argue simply stepping in with more taxpayers' money isn't necessarily going to solve the problem.
The government shouldn't be in the business of simply coughing up more money from the taxpayer and hoping for the best. Vast amounts of taxpayers' money and guarantees have already gone into the banking system. The government is not being firm enough and clear enough as to what the objectives are.
As the housing market continues to tumble, the Bank of England looks set to slash rates next week to below 2%. But as the banks get more reluctant to lend, it looks less likely that will make any difference.